Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick here this morning. Busy day. A lot to get to. A lot of earnings. We're going to talk about the weakness in yesterday's market. The overnight headlines we got from Iran hitting us down here this morning. We talk about what that means for today's session and get through as many of these reports and talk about the biggest ratings of the morning. So I do want to apologize in advance for any technical hiccups. We are off Skype for the day. We're using Zoom. So I think we're all good, but just alerting everyone for that brief technical change. Joel, what's the word here overnight?
Oh, we got some rad and not bad. 14.5 handles, pre-market high, just under 2,900 at 2899.50. That's a good 23 handles away. I don't think we see that level today. On the downside, 2868.75. That is above yesterday's low at 62.50. So we're still pretty close to that 68.75, but it just may be one of those days where the day is over. The high and low in the spoos is already in. You have crude flat here at 61.40, about a buck range, trading just on the lower end of that range. Silver and gold mixed again. Gold up $4.50 at $12.90.10. This is a big area here. This has been resistance over the last few sessions, over the last couple of weeks. So maybe take a little poke at 1,300. As I mentioned, silver's off a little more to penny at 14.91. And despite the $40 million hack of Bitcoin, I think it's still trading in the green. Basically flat here at 58.50. Triple D. How you doing today?
Trying to trade this volatility, navigate these markets. It's always interesting when your VIX spikes up from the 12 area up to the 20 area. That's usually good for me. It's been a pretty good couple of trading days here, but navigating the volatility is always interesting.
Yeah, it's, I kind of feel bad, like when you talk to the Joe general public or whatever, and they're like, oh, what a horrible day in the market. And you're like, no, actually it was a pretty good day. And,
I know. I get that. I had that yesterday. Buddy called me up and I hadn't talked to him for a while. And he's like, oh, I saw the market today. Must have been a pretty bad day for you. And I was like, actually, when I had one of my better days of the year. Volatility up. When you're trading market neutral, all you want is volatility higher. So, and that's a different style, from where, a lot of other traders trade is I'm typically long and short. So I'm trading market neutral to take the overall market risk out of it. So then I'm just trying to extract the alpha from the individual stocks and my individual strategies. So, and we're going to talk about all this stuff out there when we're in New York on June 20th, and I'll break down some of these different strategies that I'm using. But, we've talked about them on the show. So people who listen to the show a lot obviously get a feel for how I trade. And the big thing is I just trade market neutral because I can't stomach that overnight move when we're down 2%. And then watching, obviously my invest portfolio makes me sick because it's long only, but my trading portfolio is always usually market neutral.
Okay, well, we got some earnings here. So why don't we just start with we got some good ones and we got some bad ones.
Where do you want to start, Mr. Israel? I think we should go to esports and go to the big gun, EA.
All right. I was going to start with Lyft, but we can start with
well, we could do Lyft.
No, it's fine. We'll do EA. That's totally fine with me. Q4 EPS yesterday, 69 cents versus a 96 cent estimate. I don't think that's comparable, though. Sales 1.23 versus $1.2 billion. They guided their fiscal year 20 sales at around $5.37 billion. EPS for the fiscal year, $8.50. Their engagement is really strong on their platforms, on their games. And so there's a chart.
It's a big pop. So let's put this in perspective. It is a nice pop. It got up over 100 a couple times last night, kind of finding resistance up there. One thing is we're in this market here right now where pops are eventually faded. I mean, let's look at what's happened to the Apple pop. The earnings pop, it is entirely gone here now. This is what you were talking about on the pre-market show there too, Joel. If you just jump over to all the stocks that reported pretty good earnings, a lot of them were up. You had 2 or 3 other examples. What were the other examples?
Amazon, Microsoft. Yeah. Yep. I mean,
Amazon was up a little bit on its earnings. Microsoft, its entire earnings pop is gone now too. So this is not the environment, in my opinion, to chase an earnings pop. Unless you think we're getting a trade deal tomorrow or on Friday and, it's this market's going to be back at all-time highs. I don't think to chase it. I still like EA. I still like esports. I think 5 years from now, EA is going to be a lot higher. But this is the environment where pops are to be faded, in my opinion. At least until proven innocent and we get a trade deal and everything's all hunky-dory again.
I forgot about GWPH. Did you see that yesterday?
No, bring that up. And it faded too.
Yeah. Yep.
It is not the environment. So that's my tip here is
Okay.
I do not believe that this is the environment to chase earnings pops. I think a lot of these gaps could get filled, especially if we are going into a rougher period. I mean, we've talked about it, we've put it in perspective, and we're not getting full on bearish here. I mean, we just got to, put it in perspective. The market's up like 30% this year. It's been an incredible year. It needs to cool off. We got some worries out there. We got some reasons for it to cool off. That's what's happening the last couple of days. So we went from buy the dip to sell the rip basically overnight, but you've got to be cautious of that. So when I see a pop in EA, if I was long the thing, I'd be ringing the register.
Yep, and someone already did on that initial surge. Took it up to 101.96. That was right after the earnings report, and now someone's just targeting $100. You had 130 high after that, and then just sellers have stepped down from that area. So I'd use $100, 130 as a target. It's only 95 cents away. So the longer it takes to get back in triple digits, the more I look for a fade. 100.99 also was your high on April 15th.
Jump back over. Let's go over to some of the other gaming stocks because there is a little bit of sympathy move. Activision Blizzard, which I still have, the only one I have in my long-term portfolio. Well, I have Zynga too, but of the big three, ATVI, it's trading slightly higher in sympathy. And then you've also got Take-Two's trading slightly higher in sympathy. Same story here, though. I'm just not getting that excited to chase stocks when they're gapping up on, especially, when we're still showing some significant weakness in the overall market.
The earnings drop has been bought a little bit here in ATVI, so we'll just trading up just a tad here in the pre-market. We got 48 boxes being targeted, 2-day high 48.27, yesterday's high 47.97. So let's see if we can get up to 48. It's up 44 cents and have to rally another 88 cents to get there. So getting a move, but not huge.
Jump over to Lyft, and this is an interesting report. Mr. Israel, give us the numbers.
Very interesting. So the Q1 EPS on a GAAP basis, I've never seen this before. They lost $48.50 on a GAAP basis.
What? What do you mean they lost $48?
You can't lose that much money.
How do they lose $48?
I on an adjusted basis, it was only $9. And I should mention that that's actually a year-over-year.
On a GAAP basis, this company lost $48 this quarter?
Yes.
Okay. Well, we know the market doesn't care about the bottom line, but that's ridiculous.
Well, I'm saying the bottom line got better. On an adjusted basis, it was $9 loss, and it was $11 loss a year ago. So their bottom line improved on a year-over-year basis. Their sales, I guess sales is what matters. $776 million versus $739 million. So they beat the sales estimate there.
How much? 776 versus 779 sounds like a miss.
No, 739 was the estimate.
Oh, 739.
Yeah.
Well, we know they only care about the top line. That's why the stock was initially trading higher, probably because bots completely ignore the bottom line. But value investors saying no. They've turned around and started hitting the stock. Was there guidance? Was there anything else being said in this report?
Yes, there was. Their Q2 sales guidance, $800 to $810 million versus a $782 million estimate. Their fiscal year sales guidance was, we'll call it high $3.2 to $3.3 million range. And that was a tinge higher as well. On the conference call, the CEO or CFO did say that they expect their losses to peak this year. So considering their losses actually narrowed, and he's saying they're going to peak this year. Maybe they're going to get worse in the next couple quarters, but It's a year.
I hope they're going to peak, because if those losses continue like that, there's not going to be much of a company left. I mean, you can't keep losing $48 a quarter and survive. So, obviously, we know they're, investing for growth. There's going to be a lot of reasons behind that. Companies typically do lose money when they're expanding, but that sounds like a lot of losses. I mean, people are worried about Tesla, when the money they're losing. This thing looks like it's burning cash a lot faster than Tesla.
Two more numbers to give you. I just lost them now. Where their new riders for the quarter that I just had. Oh yeah, 20.5 million active riders in the quarter, compared to 14 million a year ago.
Well, that sounds good.
And revenue per active rider, $37.86 versus $28 a year ago.
Well, that sounds good too.
Right.
I participated in that. I used to Lyft a couple times. I don't know if the last quarter, but last year. So I hope they're
not all bad, but they did lose $40 a share on a GAAP basis last quarter, which is kind of crazy to me. But it's not all bad. This isn't all bad.
It doesn't sound all good either.
No, it's not all good.
Did you see that Uber drivers are striking in the Northeast? And this is
why?
Wages, benefits, I guess it's wages and benefits, and that's ahead of the IPO on Friday.
Yeah, I have one more Lyft headline. They're partnered with Waymo. In the next couple of months, Waymo is going to deploy 10 cars on Lyft, and these are self-driving cars, and people will be able to use these Waymo. This is only in Phoenix. They're going to deploy 10 cars on Lyft in Phoenix, and people will be able to use self-driving Lyfts in Phoenix. This was a new thing announced yesterday, right before the report. So self-driving Lyfts are going to be a thing now in Phoenix as a test. So I don't know if that's how you feel about the company.
I'm kind of torn on this one because it's already come off so hard. The pre-market low is 55.65. We snuck down and made a new all-time low here a few days ago at 54.32. So I really can't say much from a day trading perspective, but from a longer term perspective, if you believe in the stock, you believe in the company, here's a setup where, you can risk, $2-3, use that all-time low as a stop and maybe get a little lift off the Uber IPO. But from a day trading perspective, trading in the red, just use your close as resistance. Your close from yesterday, that's a ways away at 59.34. Fill the gap. You need to get up to 58.12. That's not out of the realm of possibilities.
I have no comment on it.
Yeah, I know.
Stocks will lose $48 a share and trade wild. I don't know. I mean, if you're trading this just from a technical basis, it's got to hold that low 54.32.
Yeah.
So are you going to challenge it today? Maybe. I mean, it's wild. It's not out of the realm of possibilities. It could fall another $2.50 and challenge that low. And if it takes out that low, I would want no part of it.
I don't think it will. So. I don't think it's going to take out that low.
I don't know if it's gonna, but I'm just saying it's a possibility that it could challenge it. So if you were long, you want to see it hold that. So, I mean, if you're coming in saying this company loses $48 a share last quarter is going to turn it around here, maybe it's the case. I mean, we know valuation doesn't really matter if it's got a story. It still has a story. Uber's coming, but the story is not as exciting as Beyond Meat, which goes up no matter what the market does. It's the best hedge for the market ever. It's up $3 again in the market.
That was Tesla. No.
I have no idea what to say about Beyond Meat too. Same thing yesterday. I mean, the stock's valuation is absolutely ridiculous. They sell veggie burgers, but whatever. We're back to the year 2000 when, you get IPO madness and everybody has to own everything. I think when the dust settles, we look at Beyond Meat. I think it's going to be a $20 or $30 stock 2 years from now, but that's $82 right now. So, do what you got to do. I mean, the thing could go to 100, it could go to 200, it could go anywhere. That's why I'm not trading it.
But the options. Dennis, the
options. It's optionable now.
Yeah.
So I could buy long puts and probably pay like $50 for like the leaps out there that I'd want. The premiums will be jacked.
Dennis, did you do any research on my P production theory?
Oh, with Fresh Del Monte. What did it do yesterday? Did your FDP go up?
No, not yet.
Just kind of hung out.
But if they're going to really, I mean,
is that the main ingredient of veggie burger is peas?
Yes, it is.
Sounds tasty.
It's good. You had one, right, Spencer?
Wait, Joel, how do you know this exactly?
I did some research.
Oh, okay. I'm just wondering. I'm not trying to be smart. I'm just wondering.
Did you have one of these burgers, Mr. Israel?
Yeah, I don't know what the ingredients were, but it tasted and looked like meat.
Did it taste like a burger?
Yeah. Oh, yeah.
I mean, that's why it's Beyond Meat. So they got tasty burgers. That's a tasty burger.
No, it's a lot. And where else did I wish I could remember. I wish I would have bookmarked where I read this about the amount, like the valuation. I think I said this yesterday. Like, there's not enough peas in the world to support like even a quarter
the valuation.
of
Joel might be onto something here. The pea shortage. So do you think that's the best way, though, is the question, Fresh Del Monte, or is there a better way to invest in peas? Can we get to the source, the pea farmer? We need a pea farming ETF.
Oh, you know what we should do?
Let's launch that. So we need an ETF that just goes out and buys farms that just farm peas.
You know what?
That could be a $1 million, $1 billion idea.
Are pea futures?
We'll call it or is there pea futures?
That's what I'm asking.
No, there's not pea futures.
We need pea futures.
You know what? We can't bring in Angie Setzer, right? Because of
not right this second, but we should definitely get her back on and talk about this. Yeah.
Okay.
This is a horrible tangent, by the way.
Okay.
Let's bring us back in. Reel us in, Mr. Israel.
What about my shorting the malls tangent? This is my best tangent since shorting the malls in late 2000.
You got the short the malls, buy the peas
spread
hedge going on. That sounds pretty good.
HubSpot had earnings yesterday after the close. Q1 adjusted EPS, 40 cents versus a 25-cent estimate. Sales of $151 versus $147 million. So they beat on both the top and the bottom line in the first quarter. Q2 EPS guidance that they gave higher by a few cents, 24 to 26 cents versus a 23-cent estimate. Sales also higher at around $156 to $157 million. Fiscal year guidance higher for the EPS and higher for the sales. So higher guidance all around and a beat on the earnings report.
And why is it down?
Go figure.
It's the growth names. They don't want any of this stuff right now. So they're hitting everything that has a high multiple right now, except Beyond Meat, and it's the growth stuff. It's just a trade. So if you look right now, everything with the higher P's, everything that's been flying, the Momo trades are all out of favor right now. So no matter what they were going to say, they reported 2 days too late. So they were reported last week, it probably been up $10, but because they reported this week, when we're worried about Momo stocks, when we're worried about valuation to a certain extent, the stock is trading down. So, what happens after a trade deal happens, maybe it gets life again. Maybe this is the pullback to buy. I think if you got down near the 160 area, and I'm not saying it's going to 160 at all, it's at 175 bid. But I'm also saying that if you came back down in that area, you got great support down there. You don't have much in there until you get to at least a 170, though. So, and you're in an environment where if the market starts to roll over again, they're going to hit stocks like this first.
Not much price discovery going on. 207 shares have traded and down 592 at 176. But just, sometimes you look at charts and like that Lyft chart, you couldn't really figure a thing out. It's just where it was. But this one, man, I like one. I'm just looking at 176 here, and 176.05 was your 4-day low. That's been holding up for a trading range here since you had the big pop at the end of April. Obviously, the major resistance up at the 185 area, but to me, it's got to get above 176, hold 176. Yep. Or for me, I could see this thing going to 160.
That's what I just said too. We don't think it's going to do that in one day, but if they decide, the market continues to roll over, it's not out of the realm of possibility. This could be at 160 again.
Yep.
So all depends on the market. We got a takeover here too. Stock just reopened. John Dotson calling this out in our chat a couple weeks ago, actually, that this was rumored. Zayo Group, Zebra, AYO. So props to John if you're listening out there. Your stock does indeed get taken over. Maybe not the big premium here, but definitely gets a premium. It's up 10% here. So nice call, John.
Yeah, $35 a share is the takeout price by Digital Colony.
35 cash.
Yep.
All right, so $33.50. So a little bit of a discount actually. It's an $1.50. I don't see what why so much of a discount. Maybe it's just a nervous market, but that's a pretty good discount for the risk arbs are pricing. I would have thought they'd price it higher, but I guess they're in a nervous market. And I guess we do have a little bit, we don't know when the date is on this. So there is obviously the cost of carry on this thing too. So an interest rate. So Zebra AYO goes off the board eventually at $35.
And no comment on either of those stocks.
Dun, 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 dun.
I don't know. I just don't know. 35.
Next.
A match group. That's where we're going. MTCH.
I've had this one wrong.
Yep. Q1.
I haven't liked this stock ever since Facebook came out or was talking about coming out with a competing product, and the stock's been straight up since then. So I got this one wrong. So I should limit my commentary because it'll be wrong.
I want to say that was a year ago.
Yeah, it was like $45, I think, when I was dissing it.
But I'll look
64 now. So I was very wrong.
I'll look up when the headline happened. But
I could tell you the day.
You write down when I make a bad call.
He does.
Yeah.
Q1 EPS for match group 42 cents versus a 32-cent estimate. Average revenue per user 60 cents a share. They see Q2 sales that are $480 to $490 million.
Was it February? Was it sometime in February that they did that? I'm just looking at the chart. I see a big.
It was last year.
It was last year. Okay.
Yeah, it was probably when the big red candle happened back in November.
Okay.
And it actually,
yeah, that's when it was. I agree.
Yeah, I think it was back then, and it obviously went down during the little crisis that we had there when they were selling everything. Got down to $33. So I guess I would have been up on that trade for a little bit, but coming back up, if I was paper trading it short at 45. I guess I never covered at 33. I never had it on at all, but just saying when I was talking about it on the show. It's back at 64, so got it wrong. Bottom line, wrong.
65.88 was your initial surge when the earnings came out. Took another poke at that area. Just at right at 8 o'clock, right on that close there. It hit 65.93. Slow leak now. This is in no man's land here, so I use that 65.93 as a target. It's a $1.70 away, so a little bit more inclined to say, hey, you've seen the high of the day, but if it gets back up there, there's your resistance. Since you peaked at that 65.93. You've just been hanging out. Let's call 64 support, but minor support that is.
If you are trading IAC, remember that this moves very closely with MTCH. They own a huge chunk of it, and IAC is going to be trading up here in sympathy today. It's already bid up at $230.50. So what Match does, IAC usually matches.
I should add that Facebook said that their dating service, Facebook Dating, is going to come to the U.S. later this year. It's already.
I still think that's going to impact this business, but when the announcement originally happened, they hit the stock hard on it, and obviously they forgot about it altogether now. So timing significantly off on that. I still don't really care for the Match for that reason, because I don't like it when Facebook has major competition. The network that they have, it just sounds so much easier. But that being said, stock's been hot. Stock's still doing well. So I guess ride it until the trend breaks.
It's already in 14 countries. So again, it'll be in the U.S. later this year. I guess we'll find out, when they tell us how many people are on it. But I can't imagine too many people. People don't want to mix that with like the rest of their lives. So I don't know. Whatever. Moving on here. What else do we have that was on my list?
3D systems. My portfolio is under attack. I have 3D in there too, and it's ugly. So I've actually had just a horrible earnings season from an investment perspective. My investment portfolio seems like even the ones that beat have come back down. So it hasn't been a great earnings season really for anyone, I guess. But this is another ground zero for Denny. He bought 3D systems, and you don't own anything that, at least that is losing money here right now in this market. So they should have reported last week, but they reported this week. Obviously, probably pretty disappointing no matter what, though.
Yeah, 9-cent loss versus a 1-cent loss. Estimate sales of $151 versus $164 million. I was looking at their past few years of earnings, and I think only one of the last 5 quarters they've had year-over-year earnings growth. So this one's a dog.
Yeah, I'm a firm believer in the technology. So we don't know who's going to be, I do believe it's going to be HPQ. I own HPQ as well in my long-term portfolio, but I've got a speculative position in DDD too. I believe in the technology. I believe in the uses for it, but we don't know who the major player is going to be. SSYS, 3D, there's Voxel Jet, XONE, there's, ORGO. There's a bunch of them in there. So, and obviously a lot of these are burning cash still right now. So until, you get mass adoption of this for different reasons, maybe it's a tough trade. But like I've got my buddy over there at Barron's Rings there, who he actually, his business, they make championship rings. They did the Cleveland Cavaliers rings. So, they make some serious rings. He 3D prints every single ring before they in the process. So, they get designed, then there's a 3D like mold of it made, and then they send it out for casting. So every single ring is 3D printer. He has like 4 of these printers, these 3D printers in his in his shop there. They're like ranging from between 100,000 and 300,000 a piece. And it's the wax. He's like, it's not even the initial cost, the wax that costs so much. So I don't know if we're going to look into wax makers and make this wax that, the 3D printers use, but that's maybe not a bad call either. But I mean, these stocks have been tough to invest in for a long time. The hype is over in them. So it's difficult to say that these things are going to be coming out and, turning it around anytime soon.
Yeah, a super long consolidation period here since the middle of March. And now you're getting a nice breakdown here of that consolidation period. 875 is your pre-market low. You are trading above that at 890, 62,000 shares have traded. I'm just more inclined to think that, okay, it's a bad report. You've been holding a short here at 10.5, 11. You got the bad news under $9. I don't know. I don't know if the pre-market low is going to hold here or not, but I don't know. I would lean on it, and let's see what happens. It gets above 9, has a chance to rally. Long way to go to get to the bottom of yesterday's range at 1050. So I don't know. I'm just natural buyers under 9. Yeah, I'd lock it.
Speculative capital only. That's what I will say.
Yep. So that's it. Triple D and then SSYS stocks that trade with it.
It's going to be down.
Story. Yep. That's trading down. And what was the other one? Voxel
There's
Jet.
XONE, VJET. There's ORGO, I believe, is another one.
That might be off the board. That's the one.
No, it's still there.
That's the one that was supposed to have.
I think it's ORGO, isn't it? Yeah, organ. Or they were 3D printing the organs.
Wait. That chart is not right.
They did a reverse split, I think.
Oh my God. Okay. Well. Yeah. All right.
Wait, that's Orgenesis. Did they change their name? Because the other one was Organova.
I think they changed their name a while ago.
Yeah, whatever. It's a pig. So anyway,
they're all disappointing investments.
Moving on, let's go to the stock that we thought was a beast. Well, it was a beast. Wingstop. Let's look at this guy because this one kept moving higher, and this morning down a little bit on their report that they gave yesterday. Q1 EPS 22 cents was a 3-cent beat. Sales of 48 versus $45 million in Wingstop.
Ooh, look at the tight ranges here the last couple sessions.
Waiting for the print.
Yeah. Yep. 77. There you go. 7707, 7724. I'll call 77 resistance. And I don't think I'd say 75 to 77. Let it shake out. That's been last 3 lows have been right around 75. It breaks that. I don't know. It's just been really tight lately. So below 75, a little bit of a breakdown. You get a rally up to 77. I think you find sellers.
I'm just getting ready for imbalances here because sometimes you will see some movement on these days that we're chopping around a little bit here. Let's see what we see.
We're 10 points off. It's mixed.
GE 130,000. It's a little bit bigger than yesterday, but still not significant. Alibaba 54,000 to sell. AIG 60,000 to sell. That was up big yesterday, so we know gaps in stock. They can't have a stock go up for 2 days in a row right now. 3M 20,000 to buy. Procter Gamble 35,000 to buy. So a few people looks like they're trying to buy some defensive stocks this morning. But Citigroup 55,000 to sell. They're all pretty small.
Quiet day. Well, I guess we're down 13 handles. We're crawling back since the show started. The pre-market show, we were making the low, couldn't quite get to yesterday's low, which was a big number, 62.25. That coincided with your April 2nd low. I'm looking at mid-range. I easily see mid-range on the session. That comes in at 84.25. And I think this is going to be like a little sigh of relief day. I don't think, I don't see us screaming back above 2,900 or crashing below the low from yesterday, but a lot of time remains.
What about Papa John's here? Not one we've discussed recently. Quietly coming back. They had their earnings yesterday. Q1 adjusted EPS 31 cents versus a 24-cent estimate. Sales of $398 versus $385 million. So they beat both the numbers in the first quarter. They also reaffirmed their previously issued guidance for the fiscal year. And we're up.
Joel.
Sorry, I was typing. What stock again?
Papa John's, we're up slightly here. We got beats. So it got hit yesterday. So wait, stop. So this reported, wasn't this yesterday it reported? Oh, I'm trying to follow. Oh, okay. So why did it get hit yesterday? It was down $4 yesterday. Was that just market effects? I guess it was. I guess we were down 600, but I didn't think that they were hitting the pizza joints too. I guess they were.
There was a headline that Papa John himself is exploring selling his stake.
Well, that sounds like it ended up being bearish. Stock came down. Now you got to pop back up to $54, getting up near and above yesterday's highs. I'm going to just stick with what I just said. Gaps, I think gap ups to be faded.
There's 100 shares traded here, Dennis. Is that your 100?
It traded a bit more last night.
Okay.
It was trading up, but nah. I mean, 52.85. I was seeing 52.70 last night. Nah. Why do you want to buy something up $3 in a market environment that they're selling everything? So until they stop selling everything here, I'm not buying any of these stocks gapping up.
53.5. We are trading above it right now on very little volume. That's the highs from the last two sessions. So hold 53.5. Yep, maybe you continue higher. I don't even know if this thing is going to open above 53.5. A lot of people stuck from yesterday, but that's what I'm using as my swing number on the downside here. I guess you'll see support at 51.41. That was the close from yesterday. Sellers, let's see, 53.5. I'm sticking with that number.
179 stocks reporting. They're all smaller mid caps for the most part. We went through the main ones here. I mean, TripAdvisor we had. There's a bunch of other ones too. If you want to jump into those, any specific stock, let us know. Like we said, when we're in the heart of earnings season, we can't talk them all. I want to go talk to House of Mouse, Disney. It's going to report here tonight. It was trading down yesterday again, giving you another shot here. It's going to be a really interesting report, and it's going to depend a lot on the markets too. I mean, people, don't believe it when you say that, but I mean, a lot of times these stocks, it matters more what the overall market is doing, what sentiment is towards the overall market than the individual reports themselves. It's a tough tape to report anything in right now. So that's why you're seeing a lot of stocks, even the ones that reported good stuff, like we were saying, like Apple and Microsoft have given it all back. So it's just people are taking in money off the table right now. So that makes it a little more difficult. With that being said, I think when the market starts to come back, if it eventually does, I think they're going to be buying stocks like Disney again. So if Disney, for whatever reason, gives you a disappointing number and gaps down, say to 127, 120, 129, I think it's going to be a good opportunity to get in. I already nibbled on some. I intend to buy more if Disney gaps down into the print.
Were you surprised, Dennis, that the stock did not react yesterday when they announced new Star Wars movies? They announced 3 new Star Wars films.
It held up fairly well, though. Like, think about
that's a good
mass destruction yesterday to everything.
Yeah, okay.
Disney really wasn't down that much.
That's fair.
So I didn't even hear that news. So they announced 3 new Star Wars movies?
They announced at 12:45 in the afternoon. They announced new Star Wars films in 2022, 24, and 26.
Is this going to be like continuing like the series, or in betweeners like the Solo movie?
No, it's not. Well, we don't know.
We don't know the details.
Basically, they announced that. They announced new avatars. They announced like 8 new major franchise films that we know are going to make $1 bajillion. And we saw the Star Wars trade. That was a thing a couple of years ago when the movies came out. I mean, it's huge. It's huge. They're widely followed. I enjoy the movies. I didn't really care for the Solo movie that much. I tell you, though, I watched on May the 4th, Be With You. They had, I think it was on AMC, they had like Star Wars Day. And they had that Rogue One on. I tell you, that's one of the best movies that they made, the Rogue One. And it was the in-between, so that, they're basically figuring out the Death Star plans, how to get the Death Star plans. So they wrote it. It was basically would have been between episode 3 and episode 4, like an in-betweener. And I tell you,
that movie is one of the best of every Star Wars movie. Like when I rewatch it, I was like, this movie is like nonstop action. It's got a great plot. The storyline is great. And because you kind of know how it ends, because you already watched Star Wars, the original, which is episode 4, they just tied it all in so well. So amazing writing on that. The Solo one I was very pumped for because of that, but it was kind of disappointing. I thought it was kind of silly almost. But the Rogue One was awesome. So they're a little bit hit and miss so far with what they've created.
Okay, but the point is they make a bajillion dollars.
They do. That is the bottom line. They do make money. Love them or hate them, they make money.
They all approach the $1 billion threshold, right? So, and they just announced 3 new ones. They announced new Avatars. Avatar is the highest grossing film in history. Right now, it's about to be passed, but as of now, it is the highest gross. So these films are going to just rain money down on them. So that's why I was surprised the stock didn't react more yesterday when they announced these dates. And now these dates can always change, but them's the breaks. And you mentioned after.
Wait, before we move on for Disney, Dennis, help me out here. Because you're the stock picker. I'm more like the balanced ETF picker. Just boring things like that.
Okay.
How can you buy the stock with that gap in there?
Oh, I know. If you think the gap's going to fill, you think you're going to get a shot at 116 on it?
Yeah,
I'd love a shot at 116. I'd buy more down there. I obviously I messed up. I had Disney. I sold it. I shouldn't have sold it. I believe first of all, the streaming service, anything Disney produces seems to be a success. They're pretty good. I mean, some of these Star Wars movies you could argue with, but I mean, they do a pretty good job. I think their streaming service eventually is going to be a success. I think there's going to be a lot of people sign up for that. I think that's the wild card here. Is it going to make a ton of money? I don't know if it needs to make a ton of money. It just needs to grow, because they're looking for growth in different areas. I mean, Netflix doesn't make a ton of money either, but they continue to grow the user base. And if they can start to get some valuation going, just from, that streaming service, like people start giving that some value, it's going to be worth a lot more. So this is not a trade. This is not, I think this is what, a nice setup here. This is a long-term investment that I believe in Disney. I believe we are finally through that resistance at 120. I don't think I'm going to get a shot to get it back at 120. If I do, great, I'll buy more. But this is going in the long-term portfolio to not look at it like retirement account. Look at it in 20 years. I said on the show a few weeks ago, I think Disney is eventually a $200 stock. I'm going to stick with that. I think when I look at Disney 3 or 4 years from now, I think it's a $200 stock. That's why I'm buying pullbacks on it.
And where will Netflix be at that time?
No idea. I have no position on Netflix. But obviously, valuation an issue for me. I'm a value guy. I mean, I don't pay 100 multiples for things. The Disney multiple is not ridiculous here. It never was. I talked bullish on it for a long time, even before the gap up 115, 116. The thing's trading a PE of like, I don't know what it was, like 19 or 20 at the time.
Right now it's 19.
It's pretty reasonable. And if they're going to start to get into streaming services and different things, and they're so smart. And you think about like the movies, like that they make. I mean, it's unbelievable. You get the Avengers, you get this. These guys produce the best content. I know people say Netflix. I do not agree with that whatsoever. Disney produces awesome content. Yes, they have some flops, but more often than not, they hit it out of the park. And I think Disney, I'm a believer in the story here, the long-term story, and that's why I'm hoping for a gap down on earnings so that I can buy more.
Okay. All right. Spencer, you want to go back to the earnings?
Oh, Seth's talking about the breakdown of Boeing, so let's talk about that.
Oh yeah. You got to talk about that.
Yeah, below the supports at 355 and change right now. Thoughts here?
It's a breakdown. It's been hanging there for a while. Barclays downgrade gave it the little nudge to take it lower. A weak market took it lower too. So now you just have to look at that hands off until you get back above 365. I mean, there's a bunch of lows and 62, 61, whatever. I just going to make it easy. 365. Boom, pressure on it until it gets back over 365, and it just seems like they're just. Like whatever they're saying or whatever news is coming out just doesn't seem to be, good. Finally got hit yesterday. For support goes, boom, boom. You had some tight ranges. I'm looking for 357. Well, 353.67. Did we get to that yesterday? Boom. No, 355.02. So I would just go back and look at those daily lows that you had, 353, 353.67, 350.73, just looking at those daily lows, not giving a lot of credence to those daily lows until they're tested and they hold at least 1 or 2 days. But resistance easier to pick out than support in Boeing.
Someone in the YouTube chat pointing out that Boeing goes ex-div tomorrow. So
Okay.
That's always interesting. I mean, there's so many sort of stories here, though. So to jump in there for, I don't know what the X div for $1.50 or whatever it is, tough to jump in there for $1.50 or $2. Yeah, this is too much risk right now. Like I do the dividend cap, and this is great, segue here just to talk a little education for a second. But I employ the dividend capture strategy on a lot of different stocks. I would do it on Boeing too, but not when volatility is escalated. When you're seeing the VIX at 11, 12, I do a lot of dividend capture. When the VIX is up at 20, I don't do a lot of dividend capture because the risk isn't there to warrant it. So, and what I mean by dividend capture is buying it before the ex-dividend date and selling it after. But with the volatility that's out there, you're going to go up, try to pick up, because Boeing pays, what's the dividend tomorrow? And I'll just use it for an example. Is it $1.50, $2?
Look real fast.
I'm trying to grab it too, just so we're talking apples and apples here.
2.3% is what they pay.
Yeah, it was 2.3%, but it's $2.06.
Yeah.
So you're jumping in there trying to grab $2, and when you're jumping in on dividend capture, the stock's going to typically gap down. So you're typically saying, it doesn't always gap down as much as the dividend. So on that play, I'd probably be trying to extract 50 cents. Do I want to take overnight risk in Boeing trying to extract 50 cents? That sounds like trying to pick up a nickel in front of a bulldozer that is like right there rearing to run you over. So, no. So when VIX is escalated, I back off on a lot of those traditional strategies like dividend capture. On an AT&T or Verizon, those are such conservative stocks, you almost always can do dividend capture, even when the VIX is escalated. But you got to be very picky when you're doing dividend capture. When the VIX is at 11 or 12, I dividend capture everything because we're not moving. So you're looking to make money in different ways. So I basically buy a stock, hold it overnight, try to sell it the next day. If the stock's paying a 50-cent dividend, I try to sell a 45-cent loss. So I pick up 50 cents and I'm only losing 45. Now, you've got to consider tax consequences if you're in a retail account. I'm in a prop account, so 100% of my stuff is taxed. If I make 50, lose 45, the tax doesn't. You're paying tax on everything no matter what. I pay on 100%. So there's no tax breaks and stuff. So that's the wild consideration. It's hard to do some of this stuff in a retail account when stuff is when dividends are taxed differently than trading profits. In my account, everything is taxed 100%, so it doesn't matter.
So it depends on the stock, right? I mean, are you talking like the day before, 2 days before, a week before?
Well, dividend capture strategy is the capture strategy in itself is just buying it the day before it goes ex-dividend, selling it the day it goes ex-dividend when it's paid it out, and trying to get out for obviously less of a loss than you paid for the dividend. So, but we talk about the dividend run-up, and on AT&T and Verizon, there's some alpha to be extracted from buying those stocks 2 to 3 days before they pay the ex-dividend because people are accumulating them ahead of that ex-dividend day because they want to play. I mean, think about it this way: if you're a portfolio manager and you want to own AT&T, well, or at least even if you're an investor, you want to own it. Why not own it before that dividend? You get that extra payment. So that's why these things typically show strength ahead of the ex-dividend date and weakness after. Because if you're going to sell, if you were going to sell AT&T, why not wait until you get paid? So that's why even from a longer term perspective, you see this run up ahead and this weakness after. But on Boeing, that typically doesn't apply. That's more of an AT&T. But hard to jump in a Boeing bottom line for 50 cents or 30 cents or whatever you're trying to get and risk $5, $10 headline risk all over the place in it right now, plus overall market risk. Difficult to do that right now.
And I'm sure I mentioned this story before when I traded at Oldie Discount. They had commission-free trading long before Robinhood, and there was a guy that would come in with like 10 and 20,000 shares of Aetna, which was a pretty big position, and he would just try and get the exact low, maneuvering. Canceling, it looked like his order was about to get filled. He would cancel the order, drop it down, a quarter or a half or whatever, and then of course try and wiggle out that last couple days. So Dennis is talking about doing this, in much smaller portions, but there are hedge
major
funds,
players that are playing around this stuff too.
Yeah.
And the options, obviously we've talked about that before where, you've got an option, somebody's got, they want to exercise their calls early to get paid the dividend. So that's when you see the early exercises come in play too, when you get a stock with major dividend. On AT&T and Verizon, it's always going to be the case. People want to get paid on the actual stock. If they're deep in the money, sometimes they'll do an early exercise just so they get paid, just so they actually get the stock. So they can get paid the dividend because the calls don't pay the dividend.
Right. Yep. I agree.
Lots of strategies revolving around all this stuff.
Okay.
And we can discuss all that stuff in anytime, obviously here, but we can discuss it in detail out there because I think when we're there at June 20th, they've got us in that trading room. I think we're gonna be talking all day. We're doing the show, right? And then they got us gonna just be presenting different, strategy presentations all day. So
don't you talk all day every day?
Pretty much. You gotta muzzle me.
All right. But you're going to be doing one special presentation, Dennis. And I know you've been debating on what your special presentation is going to be. I think they got you scheduled for 2:00. So you have to see which one.
That's the first I heard about it. I guess I should get on that.
You offered to do it.
No.
We'll
yeah. I'd love to do
the
it.
air. People
on the big stage. I get the big stage?
Yeah. They're canceling Peter Schiff, David Einhorn, and Whitney Tilson.
They're
canceling. Wow.
Cool. Yeah, that's it. All right, wait, let's move on here back to the chat. Somebody had dropped Coty in there. I had missed this action a couple days ago. Don't know the reason for the spike, but they had earnings this morning for COTY, 13-cent EPS versus a 12-cent estimate, sales of 1.99 versus $2.06 billion. So a slight beat and slight miss, respectively, on the Q3 numbers.
What was the stock?
Coty. COTY.
Okay, I'm bored already.
Gap. Had a gap, and then
what's going on with this stock? It getting taken over.
I don't know the reason.
It was trading at $11 fair. I thought this was taken over at one time. Are they getting taken over for more or something now? I can't figure out what's going on here. I remember a takeover on this. Was this not getting taken over?
Are you thinking about Avon Products that wanted to buy it at 33?
I feel like there's a takeover on the table on this one, a Coty.
There was a tender offer.
Jab seeks takeover of CoverGirl maker Coty.
Yes.
So have they actually? So they haven't actually
no.
came and actually given them a price. Maybe this in play.
It's a partial tender for 150 million shares.
All right, this has been in play. So keep that in mind when trading. Stocks are in play. Technicals sometimes go away.
Yeah, I don't know what to say about this one. It's a drop, but it looks like very, very little volume on this, right? On this move here. So I'd look at 100 shares just traded. I don't know. There seems to be a very firm buyer at 1075. So 1, 2, 3, 4 lows in a row, supported by a 1089 low. So there's your support. Your resistance, let's call it. I see 1272 was a high of the recent bump, but I see a pair of highs just below that. I'll call 1230 your resistance.
Let's talk overall market here just for a few minutes.
Sure.
Because so Trump, and to my understanding, there's going to be some decision coming on Friday they're talking about. What is this Friday stuff?
It's Friday. Spencer, you can comment on that. I mean,
no. The delegation is coming. They're here, and they're supposed to talk it out. They're supposed to have, quote, high-level discussions, whatever that means. For the next
what just happened?
Something good happened. Oh, China. I bet you the deal's on here. Come on. We're going to get some news. News me, Spencer.
I'm looking.
News me. Come on. Let's go.
Okay, I got to go.
Go. Bye. See you later.
Wait, what just happened exactly?
No one knows. We don't know. I mean, boom. Frank just said 25% additional tariffs, but I think that was before the pop here. We're looking. I don't know. What about Trump's Twitter feed? Does anybody have that?
Yeah, you know what? That's what I should. And I should have pulled up Trump's Twitter.
I'm not seeing anything on Twitter yet here.
I should have pulled up history. Trump made some comments. I don't know what they are though, but I'm looking for it right now.
Okay.
2 minutes ago, here we go. The reason for the China pullback and attempt to renegotiate of the trade deal is a sincere hope that they will be able to negotiate with Joe Biden or one of the very weak Democrats, blah, 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 blah.
That
China has just informed us that they are now coming to the U.S. to make a deal. We'll see.
Oh, let's make a deal.
We'll see, but I'm very happy with over $100 billion a year in tariffs filling the U.S. coffers. Great for U.S., not good for China. Okay, so he says they're coming to make a deal. That's not – this is not rational. But
okay. What is irrational in this? But that's why it's so hard to keep, short positions for an extended period of time in this market. You were just looking at some nice profits, okay, on whatever you had. And unless you hedged it down there, at least you bought. All those people are looking for yesterday's low. Boom. Now we're up 5 1/4 or still down 6 handles. And let's see, mid-range on the session. I mentioned it. Gosh, why couldn't it happened right off the hop here? But let's see what mid-range is here. There it is. CNBC's got it. 84 1/4. Let's keep an eye on that, folks. That's mid-range on the session. That's will be where the bulls have to defend in order to get us back up to test that high. Your last print, your high print on that move was just above that area. Let me see where the high print was. The high print came in at 86 1/4. That was your high bump there. So we got a resistance zone now from here until the open, from 84 1/4 up to 86 1/4. Let's round things off and let's call it 85, 29.85. I hope Triple D canceled all his offers on that, Spencer. So here we are back down again. Good action here in our show. And you notice how, like, just looking at the prices and looking at the number, when there's news on something, it takes a little bit. I don't know how quickly it came to some of the other news sources, but man, some choppy action here. Already back down under 28.80. All right, Spencer. Hopefully Dennis is doing okay. So let's. We got 8 minutes to go here. We can cover the rest of the news. What we had, we have not gone to the chat in a while for stocks. And so I'm going to do one right now. William Lay.
Hold on, though.
What do you want? What do you got?
I just wanted to mention real quick. I almost I missed the days. I forgot how exciting it was. Remember when Trump used to just tweet about stocks and he used to just cause that was kind of fun. And it's funny because he stopped doing that for a year or so, and we kind of just forgot. I haven't had to check Trump's Twitter during the show in a year or more, year and a half maybe. But he seems like he's been more active now in terms of market moving tweets, and I kind of like it. It adds some flavor to the morning.
Well, when you're president of the United States,
sure.
You cannot tweet. I don't know when he got the memo. I don't know if FINRA or SEC went to him and said, you cannot tweet about individual stocks when you're president of the United States. You can't tweet about Boeing and General Motors. You can't tweet about a company that your daughter is involved with. You can't. It's just common sense. It's just, you can't do it. So general market comments are a little bit different, and that's been the action. But it's done. He'll never do that. He'll never do. I don't want to say never because that's a long time, but you can't comment on individual stocks when you're president of the United States.
I don't understand this move just now. China has informed us they are coming to the U.S.
We knew they were coming
to make a deal. Right. We knew they were coming. Why would they come if they were not going to make a deal? And they're coming to the U.S. to make a deal. That doesn't really say anything. That they're going to the table. That's great, but I don't understand this move. This is beyond me.
But you're not a high frequency trader. You're not a machine. Right. And a machine says deal, and they lift offers. Okay. It's not, you don't have to think about it. It's just, this is what this market has become. It's become just moving on news, and that's what happened. Some people
also the Federal Register shows that the U.S. has raised tariffs on Chinese imports from 10% to 25% on $200 billion worth of goods. So doing what Trump said we were going to do a couple of days ago.
Okay. All right.
Back in the chat. Where'd you want to
go? Is there any news on STK here? You talk about a stock we never talk about. Just had a nice pop and drop. I don't know. William Lay asked about it, but
Never
looks kind of sleepy
heard
to
of
me. So that's not, I don't know if we'll touch that one here, but let's look. Someone mentioned EA was moving here, so let's take a look at EA. Back over $100 here, up 742, 10015. Let's talk about the high that we're looking at after hours. I didn't notice this, 101.96. So scratch that 100.95 target if you're looking for the after hours high. That would be 101.96. So back over 100, up $7.50. I don't know if like the little boost from the market help it. Old stocks. Let's see if ATVI moved off that. No, still kind of quiet. That's back under $47.
All right, how would you approach Roku into earnings tonight?
How would I approach Roku into earnings? Okay, if I owned it at any price since the beginning of the year, I would either sell half of it or sell calls or buy puts and take some kind of downside protection. Not as if I'm still in it and I believe in it long term, I would still keep half of the position. But I mean, if you're trading your portfolio off every earnings report, you got to pull your hair out. When you're in these stocks, you got to be in them for the long term. One earnings report, to me, I don't have the implied move, but if you don't want it and you're just a trader, if it gets up near 71, which is not out of the realm of possibilities, you got a pair of highs at 71. And then if they take this out to slaughter, you found major support on that decline. Actually, 55.02 was the low of the move, but I see other lows at the 56 area. So that's my thoughts on Roku. They got upgraded yesterday, didn't it? I think, or someone had a price initiation and a target of 85, but kind of a tough tape to be doing that and gave back some of those gains. But do you have Roku, Spencer, or Hula, or what do you have?
Hulu. Yeah, I have all of those things. Yeah, I've got a
Hulu. It's Hula.
No, it's not.
Okay.
Okay. I have Roku, but going to the ratings here, pretty quiet. There is one that caught my eye, and that is a UBS downgrade of US Steel to sell.
Oh, yeah.
Now, I don't know what they've been doing for the past week or so, but they're downgrading it to sell this morning.
I don't know. A lot of people stuck. I mean, trading down off the pre-market low, 1547 is your pre-market low, trading at 1562. I don't know. I don't think it's going to 1488 today. And the low of the move was at 1416. The reason I look at this one is, they're helping out the shorts here. There's no doubt about it that intentional, they're not intentional. They're helping the people that were short this stock that didn't cover when it made the low of the move. So I don't know. I think if I was short and I was short ahead of the report, didn't cover, so I'd go back over $16, actually $17. Also, you can get it back in the 15s. To me, I'd be covered.
All right. Any final thoughts here, Joel, on this market as we wrap up for the day?
Oh man, I don't know. I mean, I think the action's in. I think the high for the day is in at 99.50. I think the low of the day is in at 68.75. I still stick with 28.85 is going to be the gateway to getting back over 2,900. This is all like no more tweets on the line. That's I have to qualify that. And I just think we're going to chop around. If we get near the pre-market low of 2868.75, I think you find buyers. And then if they manage to poke it through 28.85 and you get up to 28.99.50, your close actually would be your next resistance point at 28.90.75.
One more we'll do. We were asked to look at NVTA, and I believe
NVTA.
they had earnings, I want to say, yesterday. Yes, they did.
Not good.
They lost 47 cents, but that beat by a penny. That beat the estimate there. Sales of $40 million versus $47 million. So light on the Q1 print for NVTA.
Someone has their foot on it. Someone wants out, and they want out bad. We just step down seller here, trading right at the lows of the session, 1880. Wait to see if that seller gets cleaned up here before the open. If not, I'd be looking at the 1760 area as your next area of support. That's still quite a ways away, but I see a pair of lows there, 1760. I know absolutely nothing about the company. If you do get a rally in NVTA, boy, oh boy, currently at 1880. I don't know, just maybe over $19, you might see, some short covering on strength. But right now, someone wants out and they got the pressure on it. So check your pre-market low if you're trying to scoop this one up.
All right. And on that note, that'll do it for our show today. If you missed any part of it, catch our podcast, iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts, or just rewatch our show on Benzinga's YouTube channel. Thanks to everyone in our chat, both on YouTube and premarket.benzinga.com. Please remember all the information from our show is for informational purposes only, not meant to be investing advice. The Benzinga Trading Summit is June 20th in New York City. Go to benzingatradingsummit.com. The promo code PMP15 will get you 15% off any ticket to that conference. Thanks again, and we will see you on Thursday.